Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome aboard to the Friday, April 22, 2022 Market Plus. Joining us again is Jeff French. Jeff, you do know that they talk in my ear while we're discussing things, and I thought I had more time to ask you about fertilizer, and I filled a bunch of time talking natural gas. First, finish your thought on natural gas. Is that done being high, or are we just taking a break?
I didn't like the action. I mean, we got above 770. We got to a 10-year high, and then we failed. Was it a case of profit taking? You know, profit taking usually lasts about a day or two. You know, this was a pretty good 4-day sell-off. Did not close Friday very strong. So if I'm holding a long position in natural gas, I'm more nervous than I would be being short at these levels.
What are you then translating some of the fertilizer movement to? Do we see any relief coming ever? Ever's a big word.
Yeah, I mean, ever, yeah. I mean, there will be relief, but I mean, I don't have the answers for that. I mean, it's just, there's just so much going on in this world. But, I mean, clearly there's things that we could do. I mean, we have the energy here at home. We could expand it. And I don't know why we're not doing that, besides, you know, the administration has the answers for that. But, yeah, it's a problem that's not going to go away here anytime soon.
Well, you mentioned economy. I'm going to go, of course, out of order. I'm looking for my question on my sheet here. Oh, it actually is the first one. Matt in Amherst, Wisconsin asked us via Twitter, what are your thoughts on the economy in general with inflation happening and interest rates starting to creep up? How will what happens there affect the commodity markets?
Well, I think it's affected them. I mean, if you look at these prices, and the inflation talk is something that we've been talking about here the last, 12 months. I mean, it's something that we've been talking about for a while. But the general economy, I think it's slowing down. I mean, you look at used, not used homes, but pre-owned home sales. For March, it's the slowest sales on record in the last 2 years. Used cars, which had one of the biggest run-ups during the last 12 months, are down 2 consecutive months. So yeah, it's eventually the consumer is going to run out of money, and it's one of those things where they're going to have to decide, well, do I put it here or do I put it here? And break it down per commodity. People have to put gas in their vehicle to get to work. They do not have to go out and buy a steak. They can buy the pork loin that's much cheaper than the ribeye.
Or the hamburger.
Or the hamburger, yes. Yeah. So, yes, it's going to affect commodities, but I think it's going to be, one by one.
There's an argument to be made about the cooling of the markets you just mentioned, both the used car and the housing. I mean, median price, I think, again, was the highest it's ever been. Certain people are being priced out of the market. But then look at the picture of some of the most expensive townhomes in Des Moines, Iowa. There was a story this week. They sold out. So there's somebody still buying money somewhere. It's just nationally, like you said, you look at the national level. But those are all signs, right? They're all contributors.
Oh, yeah. And it's something that we've been talking about for a long time is how long can it go? You know, I mean, where is all this money coming from? And eventually the consumer, you just start to run out of money and you have to make choices. And I think we're getting there. It's not something that's going to happen, overnight. It's a slow process.
Well, Ty in Washington was asking about how much higher the corn can go. I did ask you in the main discussion. He's from the feeder. Take it from the animal perspective of this question. How much higher is or can this corn market go?
Who knows what happens here this summer? I mean, we're at near all-time highs right now, and this corn is still in the bag. You throw weather or a drought during July on this market, I mean, who knows where it can go? I don't know how high is. Right now, corn in China is nearly $11 a bushel. Markets do things that nobody expects. I mean, look at crude oil. It traded to negative $40 a barrel. So markets can do crazy things. What I would make sure I would have done is have some call options to protect the upside, at least to get you through August. April, we're high right now, but April from a seasonal standpoint, that is typically when you not put in a high in a market. Now, I don't know if that's going to happen here this year, but If you look at seasonals, you usually don't put highs in the grain market in April.
Right, which is always a sign. Yeah, exactly. But again, I think I've asked it here a couple of times recently of all the norms seem to be thrown to the side.
Yeah, I mean, it just expect the unexpected. I mean, look at the bond market. I mean, we have not had a bearish bond market in the last 30 or 40 years, and the bond markets just continue to tank. So this market is wild, and expect the unexpected, and this thing is not even close to being done.
Well, one factor could be this question. Bradley in Upland, Nebraska asked us via Twitter, have the corn and bean prices in conjunction with a stronger U.S. dollar finally hit a level that will hurt export sales?
You know, I don't think I've seen it. I mean, you know, we have $8 corn. The last time we had $8 corn back in 2012, you know, the dollar was trading at 81. And now, here this week, the dollar is right around 100, 101. It's certainly a factor. You know, I think you look at just the general health of some of these other economies because the demand's going to be there. I mean, there's a strong demand for commodities right now. But if some of these economies in other countries, you know, get a cold and stop growing as fast, I think that's the thing that definitely could affect the export demand.
All right. Well, you also maybe peeked ahead to this question just a little bit with Phil in Ontario and Dresden. He asked a question similar to what you had just said. He asked, May soybeans, you said corn, he's talking beans here, on the exchange in China are approximately $22.34 a bushel equivalent. China has been a big buyer of U.S. soybeans, with U.S. exports likely surpassing USDA expectations. Phil wants to know, Jeff, how bullish should we be on soybean prices, or is it all about the weather?
It's weather-driven here this week, but it's also been, you know, we talked about it on the main show, it's that edible oil complex of the beans that really drove this market up this week. All-time highs in soybean oil. Typically, you don't like the rally that's relied on by the soybean oil, but it definitely helped out the soybeans. You know, the Chinese demand, actually, if you look at the first quarter, Chinese soybean demand compared to last year is actually down about 5%. Now, you got to take last year as a grain of salt because last year they were buying everything from everybody. But China has definitely slowed down a little bit here this year on bean purchases, and not just from us, but from Brazil as well.
And that could be tied to some of the hog market if they don't have as many hogs because of if they had some virus that ran through there, which they're still kind of recovering from, right? Is that part of it?
Yeah, it's a mess. I mean, they have no meal, and look at their ports. I mean, look at the ships that are trying to offload. Yeah, the hog margins are terrible over there. It's estimated that they're losing $80 a head. So they expanded way too quickly, and it changed drastically.
All right, we have one more livestock-related question. This is from Doug in Thornton, Iowa, wants to know. He asked us via Facebook, which is always a place you can talk to us. Will the higher feed grain cost lead to lower meat production with lower harvest weights? And he's asking especially in cattle.
Well, the weights right now are 3 to 4 pounds above last year. But feedlots are trying to stay current. I mean, the less days that they have to feed them $8 corn, that's better. So as long as the packers can stay current, the feedlots stay current, I think they're going to try to, push for less days on feed. I mean, that would just be natural. What we don't need is any slowing down in demand. And the cattle on feed report this week showed we're going to have plenty of cattle to get us through summer. And I just think you got these summer contracts at 140, 142. This is a great place to put some downside protection. If you think it's going higher, that's fine, but I would definitely be buying some puts right here.
Protection sounds like a common thing in many of these markets.
Well, when you have them trading at near all-time highs, it's it's pretty easy to look at the likelihood. I just what are the chances of us going higher from these levels? I think it's probably 30% to 70%. In the near term. Long term, I think these prices are going to be prices that we talk about for a long time. These are phenomenal high prices.
Do you remember 2022? Do you remember 2021, right?
Yeah, absolutely.
All right, Jeff French, good to see you. Thank you.
Great to be here. Thank you, Paul.
All right, good to have you. All right, next week we are going to look at the roller coaster ride for dry beans and other pulse crops. And Sean Hackett will join us to break down those commodity markets. Thank you so much for watching, listening, or reading. Have a great week.